Hey guys, welcome back to the YouTube channel, and today I wanted to just give a quick little update on home ownership. So I came to my property and I noticed that I had a letter in the mail that was extremely time sensitive. And after looking through the letter and reading it, I received a check. Whoa, what's the odds of that? Like, the same letter my mortgage note normally comes in, I received a check. In this letter, I received an annual escrow account disclosure statement that detailed how much I paid towards my escrow account every mortgage payment, and then how much was actually needed for various things such as my insurance, county taxes that happens twice in Cook County, hazard insurance that happens once over this year. And it seems like I paid a little over $1,000 over, so I received a check back for that. So that was pretty dope. And I think this video would be dope for me just to explain what is your escrow. The first premise that I really want you guys to understand is, like, what is your escrow? So your escrow is typically an account that is controlled by your lender to fund various things that you need for your property, such as property taxes, insurance, and other things. But those two are pretty much the major ones that I can think of off the top of my head. So another frequently asked question is, how do you know if your escrow amount changes? Most banks, or at least my bank, US Bank, sends an annual escrow analysis that really breaks down month to month what expenses comes along with this home ownership, such as, the property taxes, things that I've already said. And I want to say, on every single mortgage, it also has your breakdown for how much you've been paying for your escrow up to that point for the year as well. So just two more quick tips to throw out there for you guys. What is an escrow analysis? Annually, the lender will perform an examination of your escrow account to make sure they are collecting the correct amount of money for the anticipated expenditures such as taxes, insurance, and other bills when they're due. Overages less than $50 will be prorated and your monthly payments adjustments accordingly. So if you overpay by less than $50, they'll just prorate that amount into your mortgage. And I overpaid a lot. This was my first year, and they just adjusted it to what they thought my property taxes would be, and I overpaid. But that's cool, because this check, man, I'll accept it. And just one more quick tip is, well, it's just a quick, just an answer that most people have. Why do I have an escrow shortage? So you can typically have an escrow shortage because property taxes in your area went up, or your insurance for your property for whatever reason could have went up as well. If you ever had a shortage and your lender was charging you less than what your actual expenditures were for that property taxes, insurance, well, then the following year you should expect your escrow amount that you're going to pay every month to go up to accommodate so that they don't have that same issue for next year. In my situation, I received an escrow refund check. And that is because an overage is determined based off the projected of the balance over the next 12 months when compared to the projected monthly balance to the required. So that's what I pretty much had. They expected my property taxes, home owner's insurance to be a certain price, and it actually was less. And since I was paying that for that year, they sent me, my dues back. What are some things that the escrow covers? Obviously it's the major things such as property taxes, home owner's insurance, and there are other little taxes that your escrow covers, such as county tax, school tax. Sometimes you might have fire tax, utility tax. And then I had this one, which is a general hazard insurance. And if you had like specific insurances, if you lived in Florida, you might have some flood You live in California, you might have some earthquake insurance too on top of that. Escrow accounts are useful for both the lenders and the mortgager because escrow accounts reduce the risk on the lender and the loan, with escrow accounts ensuring that obligations such as taxes and insurance are paid on a timely basis. Escrow accounts also allow us to provide better customer service to you. Maintaining escrow means one monthly payment to help the mortgager ensure that all taxes and insurance are taken care of. No surprises, no problem. So that was just a quick little video. I was pretty happy I received that check, and I didn't know why I received that check, and I was trying my best to just look through my annual escrow analysis, and I tried to piece together what it meant the best I could until I read this brochure that explains, and it has a little glossary in the back that had a lot of definitions. And yeah, so when you guys get out there in that home ownership, you know, if you ever get a check at the end of the year from your bank, that's that. If you ever get a bill at the end of the year from your bank, that's that. So this was just a quick video, man, just popping something out for you guys. So if that was useful, man, hit that like button, comment something down below, and just keep staying positive. Until next time, peace.